Swing trading is simply the same patterns, but seen on a larger time interval chart. Here we're looking at February gold. What is going on here in February gold? Well, as you look at this pattern here, what we've just done today was a measure move within a measure move right there. Okay, now that's deep. If this thing were to go down a little bit further here, that being a measure move within a measure move may slow down the drop to where a bounce can happen. This is one of my favorites. Sometimes I'm a little too aggressive and not wait for this pattern to show up. But you know, even on the 1 minute chart or the daily chart, you want this type of pattern. Without this, it's a little bit riskier. Now, this can go a little bit further down, or it can stop right about here, depending on what's here. What's here meaning extension-wise. Okay, and again, how wide is this time range? Is it still good to accommodate this guy? Well, he got hit already, but after he got stretched a little bit. Okay, so those are the things you want to watch out for. Now, the converse of that, the opposite of that, would be something like this. This is something that you don't want to buy on. In fact, this is something that you want to go a breakout on. Is Sean here? Sean pointed this thing out to me. Now, let's talk. This is wheat. What can we say about wheat long term? Just by eyeballing it, you know it's moving this way. All right. Now, this is a daily chart. I'm going to convert this to a weekly. How do I do a weekly chart? I don't know. But my point is that this is a very, very wide time range. I'm sure this knocks out a few other. I'm not sure about these guys. But my point is that this is a strong downtrend. And in this strong downtrend, you can go with the trend if the trend shows strong. And here's what I mean. Where would you short here? Well, this thing had a nice strong downward move. Okay. And then it moves up to here. And then, now once it clears here, what do we have here in terms of the depth of this retracement off of that low, off of that high? How deep is that guy? Now, if it's shallow, then that's a strong downtrend. How about super shallow? Less than 38%. Now, that means that once you break below here, you can short here to put a stop above there, right? Well, yikes, that could be a lot of points. So what do? You want to make sure you tighten that up a little bit. And by the way, if it's super shallow, the target would be at least a 261. Okay? So the key is, if you're going to do a short over here, a stop above there, the target is still about what? 1.5 times where you got in, where your risk is, right? But we don't want this type of risk because it's the daily chart. We want to make sure that we can put a stop not above there, but above there maybe. Okay? What does that mean? That means we have to analyze this leg over here and make sure this is going strong as well. Now, on this chart, without going down to a smaller time interval chart, here's how you would handle it. Again, this is the opposite of trying to pick a low, all right? I see a deep dominant. Yikes. Now look at this. It broke below here. If it comes also deep like this and it drops, we don't want to go break out short. If this bounces up to a shallower retracement than this would be a good acceleration pattern straight out of chapter 6, measure move strategy number 2. Okay. So from here, you can see that this is deep and then super shallow. Now you can do a breakout below this low here, just right about there. Remember, this actually cleared this low already. Even if it hasn't cleared it, you can assume it would. But now that it's cleared this stands as a super shallow. I measured it, right? The measure move within the measure move starts out deep. You don't want to short yet. But once it starts, and then you get shallower here, then you can get in as a swing trade. If I was watching this, I probably would throw in some contracts. Okay. So again, super shallow is a good thing to have. So from deep to super shallow, once we clear this low here, and what's that low? $6.94. So you want to sell it on a stop at $6.94 even right here. Now let's say you took some heat, some slippage, and you got it at 648. 4 ticks of heat. Okay, now your stop would be above here. Okay, 657.5. So that's less than 10 cents. Now, once it starts going down, you want to see what type of measure move there is. Here's another one that you wrote through. It's a 2-bar wide. If that's shallow again, then you could keep on riding it down until you see another one. So you got it if you got it at 648, see you made about 36 cents, risking about 10. The risk is from here to here. The profit is, well, when you ride out this guy and you go bar to bar, bar to bar, bar to bar, you hold on. So that's your entry. You're still holding on. Actually, I would take profits, but this is still a nice trade that lasts about 5-6 days. 7 days. Now, from here to here is a key. Again, on a smaller time interval chart. Because from here, once you break below here, would it come back and bite you over here? Well, it all depends on how it moves from here down to below there. Again, the same type of concept as here to here. But that little leg is to prevent you from getting stopped out over here even. In other words, once you get below here, what are the odds of it coming close to this high as opposed to going straight down once you clear that low? Not this low, but that low. This low is broken off of a super shallow on a big chart. But here's a smaller chart, A, B, super shallow point C. Once you break below there, because that's super shallow, the stop isn't that far away, distance-wise. But you still want this leg here to be like a hot knife through butter. What does that mean? You want to see shallows inside of there as you go from this high to breakthrough. So let's take a look at that. We're going to look at the hourly chart. Here, see this leg right here, from here. Now it looks a little different in the daily chart, 60-minute chart. But from here to below here, which is right here, what kind of pattern do we see? Let me draw it out for you. That's how this low is seen on the 60-minute chart, 649.25. 649.25. As you break below there, say 649 even, you want to sell on the stop, getting stopped in, not stopped out, stopped in, short. Once you break here, you trigger a sell, and now you're in the money, right? But look, this guy is shallow as well. We don't need to put a stop above there. We can put a stop above there. This time range wider than this guy. So locally A, B, still shallow point C. Now if you broke below here, A, B, pretty medium deep. Once it breaks below there, not ready to go through the new lows yet. It does one of these things. So by watching this guy, you can say, well, once I go below here, not here, but on this one. See, if it goes through like this, would you want to go short here? No. I want this wider time range to knock out this little 3-bar wide here. So A, B, shallow point C. You break below here. Now, once you get in here, your stop can be above there. Not here, but above, so you tighten it up even more. Okay? So let's say you got in at 648. You took some slippage. Okay? Now, what's the high over here? 652. So 653, you get stopped out 5 cents. You're risking 5 cents to make over 30 cents. Now, once you get in here, you can go and zoom out to a daily chart or stay on the hourly chart. But this is the opposite of picking a low. This is just going down strong. Okay? As opposed to this down here, look at the choppy chop bar. This is not going down soon, anytime soon. This one, this is deep. Dominant from here, local dominant is super shallow, deep, super shallow, but within here is also shallow. So now we're at new lows here. So this is opposite of buying on a you know, the reason why I bring this up is this. You do have a deep measure move within the measure move here, okay? This is not you don't want to go long, even though we have a deep measure move within the measure move, and we've cleared it below here. Don't think of this as a trigger to go long. Why? Because, again, the dominant is super shallow, and there's nothing here. That's the very first one off of A, B, super shallow point C. So this widest time range isn't, you know, a third or fourth one in line. There's a double top here, but really, if you want to talk measure move, this is the first time range of a measure move, making this high super shallow. So even though this is deep, we don't want to buy it because super shallow dominant, the next one is deep, and then you come right back with super shallow again. All right? So this is a swing trade. Sean pointed this thing out to me. I'm not sure if he got in. Are you here, Sean? He is not. So this is the opposite of picking low. Today was the FOMC report. That threw the monkey wrench on a lot of things. One of the things that threw a monkey wrench at was the Japanese yen. Well, a lot of markets had this wild gyration. So when you're aware of when this Japanese yen thing's going to hit, this thing went up nice and clean, okay? And then this pattern right here was looking a little bit iffy. What do I mean by that? In other words, if you got in, let's say you got in long somewhere down here, okay? Somewhere down here, and you know the FOMC is here. Now, you would think the FOMC would kick it up to a high level, right? Which is reasonable. But if you want to be conservative, keep an eye out on the 78% and see what happens. Well, what happened here was this. Hit the 78%, and it got there with what? What am I drawing here? This is a deep measure move within the measure move. Okay? From here to here, you also have a few deep measure move within measure moves here too, right? Okay, let me draw those in. So it's reasonable to think that, well, if you're conservative, you should grab some profits. Here's one deep measure move within the measure move. Here's another one. Let me go down to a 30-minute chart so I can show you. In other words, if you're long here and you want to play it close to the vest, and you see a bunch of 461s as measure move within measure moves, coming to a 7-8 that way, you want to be careful. Now, if you're still holding on thinking it'll go up, and you see this guy show up, and you see this happening before the FOMC meeting hits, I think it's better to get the heck out if you're long from down here. Remember, we talked a little bit about getting long down here. Why? One of the things, you have some 461s measure move here. 461. 461. This is a 30-minute chart, but there are a lot of other 461s hovering there from a larger chart as well. Not a lot, there's some. Okay, so if you happen to get long here and you have a higher low, higher highs there, that's a good thing. But on in the other direction, I have 3 measure move within the measure move coming into a 78, which could cause a hiccup. Well, is it going to be a hiccup or a drop? When this shallow shows up, I would be If I was long there, I'd be grabbing profits right there. Especially when the news hits, boom, up and down, down, up, crazy. So you want to manage it to some degree. Excuse me. So what we have is a way of looking at things on many, many layers, many different layers. Let's take a look at one that we talked about yesterday a little bit, cotton. Cotton on a daily chart, we talked about that being a possible high. Now today we pulled back a little bit. Now that high over there, this high over there, I should say, was done due to a lot of measure move extensions coming up. Now let's take a look at how we would manage that. On the 60-minute chart, we're looking at this high. If we happen to pick that high over there, now that we're coming up, you want to put a stop above this high. This thing should not go above this high. If it does, it'll be a different iteration. What kind of iteration it'll do? Well, if you want to take a little bit of heat, you could ride it, hold it until it gets to about there, possibly there, which is a 461. Okay, now if you're a swing trader and you got in here, you could hold on because this is still very small. If it does this and then drop, you'll still be in good shape, all right? Because you're looking for a big drop as a swing trader. Shallow, deep, higher high, lower low, higher high, off of a double bottom 461 as a measure move within the measure move. If it were to go above this high here, it should not go too much higher. Again, this zone here was already given to us by a lot of extensions, okay, on these. So you can take a little bit of heat if this were to eventually work its way up. I'm just going to throw in a few, this is a raw combo. Hang on, I made a mistake here. Something like this is deep, deep, and deep. If it gets a little higher, this can still work its way down in due time. Or this high that we did yesterday could have been the high. So we'll watch this and see how what happens. So this is how you can sort of see this choppy, deep, deep, deep into the zone. Is it here or is it here? Remember, the calculation was 93.77. This high was only 72. Could it go up to hit 70 or 93.80 or 94 even or 93.88? Sure. But this zone here, coming off of something like this, is a benign move that won't run away from you to the upside, even if it were to retest this existing high or goes through it a little bit. Same type of pattern or different variation of this pattern is what I look for when I day trade the crude oil. The same type of theme. Let's talk about this choppy chop theme and see what it is that I was looking at in the crude oil today. Okay, and on the crude oil today, I'm going to go back to the hourly chart. Okay, this is what the shallow, deep. Now from here, a deep measure move within the measure move. Okay, so this is shallow again. A, B, shallow point C, but A, B, deep point C, and within there's A, B, very deep point C. So once it gets above here somewhere, this leg is going to drop somewhat. Now that leg was the drop that I was looking for. I'm on a 60-minute chart. Let me go to the 15. Okay, and it was this drop here. Now it can be the whole thing or a partial of that. depending on how ugly the ride could be. So the deeper and deeper and deeper situation makes this thing a decent shortable setup. Okay, let's take a look at high-grade copper. This is high-grade copper. What can you say about copper? I can say it's been choppy and sideways-ish. With this type of situation, I'm not going to, hold on for a long-term trade. This is not like the wheat chart, where it's obviously a one-way ride going south. So this would be a swing trade, or a day trade, or a very short swing trade, because I would need to zoom in on a 60-minute chart and can't rely on this daily chart. When you can't rely on the daily chart, you need to zoom in, then the trade, but everything being equal, will be a shorter duration. If I zoom in on a 1-minute chart and nothing else is backing me up on the 5 and 10-minute charts, then that move would be a minimum move. Okay, so in this situation here, what I have, a lot of deeps, a lot of 78s being hit. So if it goes from 78 to 78, I don't like it very much. Let's go to the Australian dollar. We talked about how bearish this thing was, right? Now Sean was going long here. He lost $300, but he reversed and made 1,000. Smart. Now, as we speak, we just made another super shallow guy right here. Okay. So the downtrend continues. When I see a super shallow, I'm thinking, oh my gosh, it's going to cut right through. Oh, way less than 38% deep. But of course, we want to see what happens from here to here, this leg here, just to see whether there's going to be any backing filling in, or if there's going to be a clean move. Okay, 60-minute chart. This one had a lot of backing and filling in. Okay, so even though this is super shallow, that guy got knocked out. We didn't see that on the daily chart. So here's that super shallow situation here. But notice how this one, although super shallow, had some issues, meaning medium, deep, medium, and then measure move within measure move. This type of choppy chop chop would cause you a little bounce here and then down here. Okay, so this had issues here. It wasn't a clean breakthrough. From here, whichever the high is, down to where we broke below here, medium, and then a deep, a choppy ride down. In other words, when you do a breakout below here, which just happens to be around here, and your stop is above there, it's going to be a rocky ride, thanks to these guys here. Even though it's super shallow, which will promise you that it's going to go down. Go down how far? I would say go down to around 261 at least, if not more. If it's a strong downtrend, you'll go further than 261. But that's the promised land, if you will, to take profits if you are trading off of a super shallow dominant. In this case, local dominant. Not local dominant. I would say several layers down, actually. Okay, let me go back to the daily chart. Daily chart shows the dominant here at shallow, medium, then we got super shallow here, kind of a higher high, and then here is the last leg coming down. When you see a lot of shallows like that, it's just going to keep on motoring. The classic example I always bring back your attention to is sugar. Here's a sugar chart. We had a bunch of 461s there. We talked about that in details already. Look at this. Still new lows being made. Below 16. When we talked about it, was around 19. Okay. So that's over 3. Over 3 cents. Every cent is $1,120. So that's over $3,300. It took about a couple of months from October till December, but it was shallow, 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 shallow. This is not something you want to go long on. But then again, deep, deep, deep going up, shallow coming down. This is ideal. If I find something like this on a smaller swing trade, say a 15-minute chart, 10-minute chart on crude oil, I'll be all over it. But we have to look for different variations of this guy. You're not going to get something like this as cleanly. Let's take a look at the S&P on the daily chart. Now, I have a candle. If you guys use candle, that's fine. I like to use a very, very simple open, high, low, close. Kind of wild and choppy, but thanks to the FOMC news, we're right back to new highs. Now let's take a look at how this became so. From here, super shallow dominant. This is, this is shallow, medium, shallow. There's a lot of shallows coming up here. We don't have any long-term shorts up here. Yes, there were some drops, but on a daily chart, it wasn't like a big series of extensions. What I'm saying is there's lack of slowing down into that zone. So on a 60-minute chart, you can kind of make do with the patterns. Now here's the FOMC news. Huge up move. Let me go to a 15-minute chart. Huge up move. Now, of course, it's the FOMC, so it's a little tricky. But it came down to $78. Now, I want to let me show you what I saw beforehand. I wasn't trading this. Let's take a look at some before chart and see what I was looking at here. Here's a 60-minute chart. Now, the first thing I want to see is which way is the wind blowing. Now, the key is to buy on dips, generally speaking. It's coming off of this low with a shallow up here. And then off of this high, we have deep, and then measure move within the measure move deep. Here's another deep. So possible buy on dips. But dip to where? That's the question. That, if I'm aggressive, here, chart number 2 says, will it bounce at this 78%? Or will it come down closer to this 261 of the dominant? Well, actually, it's 70 of the whole range, right? But I'm looking for a bounce. Where is it going to drop down to for me to buy? Because you have a shallow going up this way and deeps off the highs over here, and here, the bias is to buy on dips. Sure enough, it dipped all the way down here. It worked its way down here, and then it shot up pretty much the biggest move I've seen in a while, like 30+ points. Now, over here, you have a very pretty measure move within a measure move. Okay? That's a very good thing to have. Because this measure move within a measure move, in the midst of a lot of deeps, will okay. So from here, we have a deep measure move within a measure move that is very, very useful. Okay. Now, what else is useful behind this? The 70% is definitely helpful. I see a double top here. Okay. Now, on the 15, I'm going to go down to the 5, and the same set of routines. If I see a lot of deeps stretching out to the 461, I wasn't looking at this chart, but I mean, pattern-wise. Now, with something like this, you're going to have a violent down move and then a violent bounce. You're not going to have one of the three slowing down patterns. Okay, probably don't need that because too many deep stretching out to the 461 is telling you that's going to be a quick down and up move. Okay, deep, deep, a lot of deeps here. The 78 held and did not go below here. So around 63, 64 here would get you way up there, about 40 points. But the setup was there. Deeps off the highs, shallows off the lows. So this is the first thing you want to see. Okay, dips, buy on dips. Well, it wasn't a dip; it was a huge down move. But still, the energy is to buy on drops here. Opposite of crude oil, which was short, taking short. Okay, so the longer term patterns are still usable. I mean, are still using the same. We're still using the same type of patterns. Let's go to the crude oil again. Now this time I'm going to go to the daily chart. Okay, daily chart. What do I see on the daily chart right now? What can I do? What's the bias there? To be honest, I don't know. Okay, I don't know what the bias is because my thinking is that personally for me, I think it's going to drop a little bit like this over the next several days, but I could still do this. Okay, so my thinking is that it's going to work its way down over several days and weeks down to here. Why do I say that? Well, this seems to be some sort of extension highs off of this low here. If that was the case, and if it gets there with a measure move within the measure move, which is the favorite of the three slowing down patterns, then that could be a high where any bounce would be a retest of that high. So let's take a look at it from a smaller chart perspective. Remember, we want extension extremes, and we also want measure move within the measure move as a first line of slowing down patterns. So here I am on a 60-minute chart. I'm going to squish it together. See, starting way down here, in terms of time range, I see the width off of this medium deep guy. Here's this 461 here. The next guy in line is this one right here. Now, the second one's 461 got hit already. Okay. This first one, his time range is still good over all of these guys. This guy is screaming. He is way overstretched. This guy's 461 is usable to be averaged in. Averaged in with what? With this guy and maybe this guy here. Okay. Now, if you look at something like this, you say, wait a minute. There was a center of gravity around here. And did we make a lower high, lower low off of this zone here? Well, we did. So it's the same type of thing. This thing tipped its hand downwards, having hit some high that I would assume is some sort of 461 combo C. And we made this low here. So I'm thinking any bounce over here is fair game to be shorted so long as we don't break above there. That's the general idea of a bounce to a short. Now the real kicker in here in crude oil is this guy right here. This guy's time range and this 461 this time range has not been knocked out yet. You say, well, he's blown. Well, price-wise, this has gone beyond his 461. This caused a hiccup drop, yes. But the fact that we had shallow and shallow here stretched this guy out to where he has to be averaging with this guy and this guy here. Okay? And way up there. Okay? Now, this is not an exact pick of the high here. But anywhere here where there's a reasonable large lower high, lower low, and here it is on the red lower high, lower low, that could be the signaling of, hey, that could be it. How big of a drop can we expect? Well, how deep is the dominant here? The dominant here. Oops. He's not terribly deep, but he's not super shallow. Okay. Well, what does that mean? That means that I would be leaning on having this drop, let's say 38% from here to here. Well, guess what? We haven't hit it yet. Well, actually, I'm sorry. We almost hit it. That's as good as hitting it. Well, let's say 50%. This is a guessing game because I think it's going to replicate the dip of that. So here's a 50%. So is it going to move down to hit this number from where we are right now or the next several days? Could be. But with the holidays coming up, I don't know if there's any big moves ahead of us, except if it's driven by FOMC news or other news. But this is the kind of thing where I'm looking at in terms of structure from a larger chart perspective. So I'm a little bit biased to the downside. Now the kicker, of course, is how about all of this? Is this all telling us is chopping around to not go higher? And then once we make this lower high, lower low rolling over, could be the signaling of further downward moves, thanks to that guy being medium deep and that one is medium as well? I'm thinking it would. So any of the pops here will be looking to short. Now, what's happening tomorrow? Well, tomorrow, I like Thursdays. Fridays are sometimes good, but like today, FOMC and the crude oil inventory caused me to be a little more conservative. Now, on this February crude oil, I'm looking at that zone over there. If it chops its way over here tomorrow, I'm shorting it. Now, I'm not shorting it to, ride it all the way down, but it may, do something like this. But that could be still quite a few points as a day trader, right? And why that small big of a drop? Maybe a 38% drop only. That would be something that I would like to do tomorrow. Choppy chop chop into it. Locally, if I have some 461s there. Now, it may go all the way down to the promised land, but I'm not a swing trader. I'm just going to take this and be done with it, playing it close to the vest. All right? I'm going to stop recording here.